Good morning, everybody, and welcome to the Morning Volatility Report. As I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our Morning Vol Report. If you want to hear this handsome guy, Mark, go to our blog. He was talking VIX, SPX, and oil volatility and Exxon on Bloomberg yesterday. Stop in our chat room, and you can listen to Mark every once in a while when he is here. Looking at some trade ideas. If not, it will be me or some of one of our other pros should usually drops in. A couple of things. Our store is here. Again, we'll be adding more content to the store. We have a lot at Option Pit, and it will slowly be popping up there as time goes on. If you're an Option Pit Gold customer, you get everything in the store for free with your Gold subscription. Alrighty. Next, we're going to be running a boot camp in early January. And with that, let's move on. Twitter's kind of coming back to life. The ugly, dirty bird, as we call it. But anyway, more important, really, what's going on? We're not getting that rebound. So right now I kind of say volatility comes in threes, meaning we have oil prices are still kind of weak for whatever reason. If you look at a chart of crude oil and the SPX, they're pretty much tracking until oil stops going down. Remember, problems in oil barrels, or lower oil prices makes a lot of that. A lot of the debt that those companies took on tougher to sustain, and that forces junk bond market down. Funds sell their equities, and remember, bad things that happen in the bond markets generally spill over into the equity markets. 2008 being a case in point. For the most part, right, companies were fine, but leverage in bond market and mortgage-backed securities sent that market down pretty hard. So that is the dog, and the equity market is the tail, unfortunately. And for now, that is kind of that underpinning of unease, right? A lot of commodity stocks. So a pretty good chunk of the market cap in the S&P 500, there's some uncertainty there. The market hates uncertainty, and that drives vol up. Earnings are done for the most part. The top Q stocks did really well. Everything else was kind of blasé. We've got the last year of presidential term, which historically those have not been great for equity markets. We've had pretty much 6 straight years of going up. So it's going to be tougher for the S&P 500, I think, to do great things, although there will probably be some relief on the Fed. The question is how low does relief go? My guess is we probably won't see, and I find it hard to believe we could get below a 14 VIX anytime soon. We can probably see 15 next week, something like that, if there's some real relief and oil stops going down, and then things probably stabilize a little bit. There's still a lot of dislocation in currency, and let's say we'll just call it the macro names like euro, treasury bonds, currencies. So there's a lot of big potential movement kind of on the horizon, and I think that's what the markets are trying to price right now. Some ideas we'll look at. We can look at CMG keeps bouncing around on this E. coli stuff. We've looked at some ideas in there. We have looked at some spreading ideas. We will look at some more vol product ideas today in our chat room, kind of gearing up for next week and also for expiration tomorrow. Because I know volatility has had fits of falling apart. I think it will be tough for it to fall apart into the weekend tomorrow, really gearing up for next week. I don't see a lot happening with vol, but of course that's a trade in itself, and you don't think much is going to happen. Other than that, look for our next event on the calendar. And for all of you new subscribers, I will be, and old subscribers, I'll be seeing you in the chat room. Also, we have our Gold Lab today. We'll probably do a little more with volatility. going into next week. And with that, I will see all of you later.